So Steve, let's talk about the month of May in the closed-end fund market. The S&P 500 was up about 1.8%. The Barclays Ag was flat. Other asset classes, including closed-end funds, were up somewhere between 50 basis points and 1%. So where does that put closed-end fund returns on a year-to-date basis?
Sure. Closed-end funds have had a good year. Bond funds are up about 8%, both muni and taxable fixed income, and equities are up about 5.5%. And so to your point, closed-end funds have been outperforming for the month and really year-to-date. And so investors are quite pleased with the performance in 2016.
Steve, does that speak of sentiment improving in the closed-end fund market? Clearly, some of the performance numbers that you spoke about are pretty attractive.
Yeah, I mean, you can measure sentiment by the average discount. The average discount today is at about 5.5%. That's about 200 basis points narrower than where we started the year. And 5.5 is still wider than the historical average, but just by about 100 basis points. And I think that it's important to realize that when you think about the average discount, it's, you've really got two different markets. You've got premium funds and discounted funds. And so when you look at the average discount, it's easy to lose sight of the fact that 20% of closed-end funds today are trading at premiums to their net asset value. And that average premium is about 7%, which is, for many of our viewers, hard to appreciate. Yes. But the reality is many people buy closed-end funds for yield and price, and they ignore the premium. And so when you look at discounted closed-end funds, there's about 450 funds today. And the average discount on those funds is about 8%. And so it continues to be our view that you can find cheap closed-end funds that are attractive relative to their historical average discount in many asset classes today.
So the 5.5 average discount is masking the fact that there's an awful lot for you to look at at a much more attractive discount level.
Sure. I mean, you can look at most asset classes and you could probably find a fund that's trading at a 10 plus premium and the same asset class at a 10 plus discount. And so, really across the board, there's a very large range between the cheapest and the most expensive closed-end funds. And again, when you think about the discount average, it's important to understand that there are funds that trade at 50 to 100% premiums that are really distorting that average for the space.
We'll save for another video why a fund might be trading at a 50% premium. That's interesting. Steve, last question this week. We have not touched on the closed-end fund IPO market in quite some time. As most of our viewers know, closed-end funds do come to the market via IPO like an equity or a stock. So can you give us a sense of not only just this year, but for the last couple of years on what's been going on in the IPO market?
Sure. I mean, when you look at the space today, and we talked about discounts being historically wide, I said discounted closed-end funds trade at an 8% average discount. It's hard to bring new funds to market when there are substitute products trading at wide discounts. Sure. And so there's a lot of muni funds and taxable bond funds, high yield and bank loans. And if those funds are trading cheap, it's hard to bring a similar fund to market, certainly by one of the same sponsors. And so whenever discounts are wide, a lot of the activity in the primary market really shuts down until the discounts revert back towards their historical averages. What has been changing a bit is that some of the new funds that have been launched year to date, despite the fact that you can find wide discounts in many asset classes, two fund sponsors brought corporate credit funds to date, new IPOs to date. And the difference there was that they were term trusts. And so they had a set liquidation date. One was a 3-year trust and one was a 5-year trust. And so that's not the same as a substitute product to a perpetual life closed-end fund. And so there's a market for primary issuance in term trusts, but perpetual life closed-end funds, the activity has been limited because there's an excess supply of cheap closed-end funds in the secondary market. And that's kind of been the case for the last couple of years. It's been a while since we've seen $1 billion IPO, and I think that that will change if and when investors return to the space. I wouldn't be surprised to see muni closed-end funds start to be launched again because the average for many of those funds is a premium. And so when you look at your alternatives, you can buy a $1 billion muni fund at a 6% premium, or you potentially might allocate to a new IPO. And so I think the market's certainly cyclical. If and when discounts continue to narrow in the secondary market, you'll start to see more primary activity.
Steve, thanks as always for your comments.
Thank you.